Welcome back to Dinar Community Channel. In recent days, a ripple of speculation has turned into a full-blown shockwave across the global currency market as reports surface that a new, unexpected rate for the Iraqi dinar has been spotted on certain Forex trading screens. For years, the revaluation, or RV, of the Iraqi dinar has been a highly debated and controversial topic among economists, currency traders, and a large community of hopeful investors who have held on to their notes, waiting for a moment they believe could change their financial futures forever. Now, with credible whispers that this moment might have finally arrived, the market's attention has shifted sharply to Iraq's currency and what this sudden development could mean for both the nation and the world's financial systems. The rumor mill is spinning at an unprecedented pace. Early reports claim that the Iraqi dinar's new rate, observed on limited Forex terminals, is significantly higher than its long-standing peg against the US dollar. For years, the official exchange rate sat at roughly 1,300 Iraqi dinars per USD, with minor adjustments and policy changes occasionally shifting it slightly. But the alleged figure now appearing on certain dealer systems is not just a small change, it's a jump of historical proportions, hinting at a possible strategic move by the Central Bank of Iraq (CBI) to reintroduce the dinar as a strong, competitive currency on the global stage. This sudden development has sparked a frenzy of analysis. Some believe this is the result of behind-the-scenes coordination between Iraq, the International Monetary Fund (IMF), and major global banks. Others see it as the first public sign that Iraq's years of economic restructuring, debt settlements, and international trade agreements have finally reached a tipping point. Iraq has long been under pressure to diversify its economy beyond oil, combat corruption, and modernize its banking infrastructure, tasks that have been slow but not stagnant. Over the last few years, Iraq has signed multiple trade deals, increased non-oil exports, and worked with international partners to digitize its banking system. These steps, some analysts argue, were part of a deliberate path toward monetary reform, with an RV as a final step. One of the most compelling aspects of this report is where the new rate was seen. According to multiple independent sources, certain institutional Forex platforms and banking terminals briefly displayed a dramatically higher dinar value during low-volume trading hours. Such occurrences are rare and often deliberate, as interbank rate testing is not something that typically appears by accident. In fact, experienced currency traders note that banks and central financial institutions often run shadow tests before major rate changes to ensure systems can handle the updated figures without technical glitches. If that is what happened here, it means the RV may not only be real but imminent. The geopolitical backdrop adds even more intrigue to this development. Iraq's leadership has been increasingly vocal about asserting economic sovereignty, particularly after years of heavy foreign influence and IMF oversight. Prime Minister Mohammed Shia al-Sudani has made repeated public statements about restoring the dinar's strength and rebuilding trust in the national economy. These statements, once dismissed as political rhetoric, now seem to align with tangible signs that a monetary shift is underway. Furthermore, Iraq's oil sales are being increasingly settled in currencies other than the US dollar, particularly in transactions with China and regional partners, which has helped reduce dependency on USD reserves. The psychology of the dinar investment community is another key factor in understanding the current wave of excitement. Many of these investors have held their currency for a decade or more, enduring countless false alarms, scams, and conspiracy-laden speculation. For them, the sight of a higher rate on actual Forex screens, if confirmed, represents more than just a number. It's a validation of years of patience and belief in Iraq's economic recovery. It's also a sign that the years of strategic positioning, both by Iraq and by those watching from the sidelines, may be about to pay off. Yet, for every optimist, there's a skeptic. Some financial analysts warn that rate leaks or sudden appearances on Forex can be misleading. They point out that in the past, currency revaluations have been preceded by test figures that never made it to an official rollout. In other cases, temporary rate spikes have occurred due to technical glitches, algorithmic misreads, or even deliberate disinformation campaigns aimed at manipulating speculative markets. The challenge here is verifying the source and authenticity of these reported rates. If confirmed by multiple large-scale banks and by Iraq's own official channels, it would cement this moment as the precursor to a true RV event. If not, it could simply be another in a long line of teases that keep the dinar story alive without delivering the anticipated transformation. The possible reasons for Iraq to initiate such a move at this moment are numerous. Firstly, the global economic climate is in a state of flux, with shifting alliances, currency wars, and increasing de-dollarization efforts among certain nations. Iraq's strategic position, rich in oil reserves and with growing influence in the Middle East, places it in a unique spot to leverage a strong currency for geopolitical advantage. A sudden, significant RV would not only strengthen domestic purchasing power but also position Iraq as a more formidable player in international trade. Secondly, the internal political climate, while still volatile, has stabilized enough for the government to take bold economic actions without immediate risk of collapse. Over the last year, Iraq's security situation has improved, its oil revenues have risen, and foreign investment interest has grown. These conditions could provide the necessary foundation for a sustainable currency revaluation. Another element to consider is the IMF's potential involvement. While the IMF does not directly set exchange rates for member countries, it often plays a consultative role, especially in economies undergoing significant monetary reforms. If Iraq's CBI has coordinated with the IMF, it is possible that the higher rate has already received quiet international approval. Such coordination would explain why major banks might be running rate tests in advance. In previous cases of currency reform, international coordination was essential to ensure a smooth transition and avoid sudden shocks to foreign exchange markets. The banking sector's readiness is also a crucial factor. Iraq has been steadily upgrading its financial systems, introducing electronic payment infrastructure, modern ATM networks, and digital banking platforms. These upgrades, combined with new anti-money laundering protocols, make it easier to manage a sudden change in currency value without inviting chaos. If banks have been preparing for months, or even years, for a revaluation, the recent appearance of a higher rate on certain screens may be the final systems check before public rollout. For global traders, this potential RV presents both a massive opportunity and a considerable risk. If the dinar's new rate becomes official, early movers who hold physical currency or large positions in dinar-denominated assets could see unprecedented returns. However, the volatility following such a move could also be extreme. Historically, newly revalued currencies can experience sharp fluctuations as markets find their equilibrium. This means that while some may profit handsomely, others could face steep losses if they mistime their trades. On the ground in Iraq, the impact of a genuine RV would be profound. Ordinary citizens, long accustomed to the dinar's low international purchasing power, would suddenly find themselves with a stronger currency that can buy more abroad and attract more imported goods. Inflation could stabilize, savings would hold more value, and wages, if adjusted in line with the new rate, could provide a higher standard of living. However, such a transition is not without risks. If mismanaged, a revaluation could trigger short-term shortages, speculative hoarding, or black market trading at unofficial rates. This is why a carefully planned and well-communicated rollout is essential. From a macroeconomic perspective, the ripple effects of an Iraqi dinar RV could extend far beyond Iraq's borders. Neighboring countries with close trade ties would need to adjust quickly, as would global oil markets that price in multiple currencies. If Iraq's move is seen as part of a broader trend toward currency realignment in resource-rich nations, it could embolden others to consider similar shifts. This, in turn, could challenge the dominance of traditional reserve currencies and accelerate existing trends toward a multipolar financial system. As of now, no official public statement from the Central Bank of Iraq has confirmed the new rate. However, the persistence of these reports, combined with the credibility of some of the banking sources involved, means the story cannot be dismissed outright. In previous major currency adjustments around the world, leaks and quiet tests almost always preceded official announcements. The question now is whether Iraq will follow through and make this higher rate a reality, or whether this was merely another internal systems exercise that inadvertently spilled into public view. The timing of the leak is particularly noteworthy. Iraq is entering a period of strong seasonal oil demand, which means increased foreign currency inflows. This is traditionally a moment when governments feel more confident about making monetary moves, as higher reserves provide a cushion against volatility. Moreover, global attention is currently distracted by other major geopolitical events, which could allow Iraq to execute a revaluation with less immediate scrutiny from the world's financial press, giving them more room to stabilize the market before the story becomes front-page news. For those who have waited years for this moment, the current atmosphere is a mix of excitement, anxiety, and cautious optimism. Many remember past moments when similar rumors failed to materialize, but the nature of this sighting, directly on Forex-linked systems rather than through unverified screenshots, feels different. If true, it would mark one of the most significant currency revaluations in modern history, not just in terms of percentage change but also in its geopolitical and economic ramifications. The coming days will be critical. Traders, banks, and governments alike will be watching Iraq's every move for confirmation. If the CBI makes an official announcement and the new rate holds steady, the global currency market will enter a period of intense adjustment. If, however, the rate disappears without explanation, skepticism will grow, and the dinar RV narrative will once again return to the realm of speculation, at least until the next whisper emerges. The stakes are immense. For Iraq, a successful revaluation could signal the beginning of a new economic era, drawing investment, increasing national pride, and solidifying its place in the regional power structure. For investors, it could mean the fulfillment of long-held dreams, or a painful reminder of the risks inherent in speculative plays. For the world, it could be yet another sign that the financial order is shifting in ways that will reshape global trade, currency flows, and economic alliances for decades to come. Whether this is the moment the dinar community has been waiting for or just another tantalizing false start, one thing is certain: the appearance of a new Iraqi dinar rate on Forex screens has reignited one of the most fascinating and polarizing currency stories of the modern age. The shockwave is real, the questions are many, and the answers, whatever they turn out to be, will echo far beyond Iraq's borders. Like and subscribe for more videos.